Welcome to the Bull and Bear Show, episode number 8. And I have my very special guest here today, a commodity expert. His name is John Feneck. How are you doing today, John?
Very good, Rich. Thanks for having me.
Oh, my pleasure. Very excited to have you on the show and excited to learn more about you and your company and all the different things that you're doing and all the different things that your expertise is in. So why don't we start off with the first question? John, tell us a little bit about your background and how you started John Feneck Consulting.
Sure. So I started in finance in 1992 with Merrill Lynch Mutual Funds, which is now BlackRock, and worked on a large equity fund as an analyst, and then started to work for the same type of companies like Merrill Lynch funds, JP Morgan funds, always in a capacity where I was an intermediary between a portfolio manager managing billions of dollars and going into the field and talking to financial advisors in the U.S. So I managed a territory when I was with Merrill Lynch that consisted of about 26 different branches. So it was, rotating every 5 to 6 weeks through those branches, telling that story with 250 products. We did everything from 401ks to 529 plans to, AI. I mean, just unbelievable, spectrum of products at Merrill Lynch and now BlackRock. As you can imagine, it's the largest asset manager in the world. So a lot of suitcases to carry, so to speak. And then moved on to smaller boutiques in my career. And one of those was Sprott. I started working for them in 2016 and was lucky enough to be added to their portfolio management team when I was there. And when I was just before I was hired there, I started my own track record in the mining space, because I thought that as I called CEOs at Christmas of 2015, everyone was so head in hands, very much like the environment we're in right now, Rich, where, just until the CPI number, July 12th, you had a lot of CEOs really just, wondering what it would take to get a gold junior to move, given that gold has just traded so well this year. But, I think the worst is behind us right now in the sector. And I think some of these men and women would agree. So, I basically did that, 30 or so phone calls with people around December 15, January 16, and just found that common trend of everyone is ready to give up, right? And so as a value manager, we love that kind of environment, because you're getting close to a low when even smart people are saying, look, this is just, I've never seen anything like this before. So another telling thing to me at that time was that if you looked at a Bloomberg terminal, GDX was trading 20% short, which I have never seen the ETF trade much more than 24% short in my entire career. So, when a fifth of an ETF is short, you want to go the other direction, generally speaking, if you have, confidence in what that ETF or mutual fund is trying to do. So, basically started that track record while I was at Sprott, and, have been lucky enough to do that now for 7.5 years. We started Feneck Consulting a little bit later in 2019 because I was at Beaver Creek and was talking with a bunch of CEOs at a round table. And 3 of them came up to me afterwards and said, you really should start your own consulting firm because you have a passion for this and you're well-spoken and blah, blah, blah. So I did that the following Monday with no clients. The first 3 to 4 months was pretty tough. It was no longer working for a big brand and getting a paycheck. It was, grinding every single day. We were lucky enough to co-write an article for Kitco because in March of 2020, you may remember that we had these triple ETFs in our space that would mimic the price action of GDX and GDXJ. And they were called NUGT, which is the triple GDX, and then JNUG, which is then was the triple GDXJ. And they're run by a firm that, managed about 16 billion in assets. I saw some very unusual price action. We call it slippage, where if you're a triple ETF and let's say GDX is down 1% for that day, well, then Nugget should be down 3%, but it was down, let's say 4 or 5 or 6, it was way off. And this happened multiple days in a row in March of 2020. So I co-wrote an article for Kitco about this and exposed the fact that this company was not returning my calls. I think I spoke to 5 to 7 different people there. I didn't name anyone, But essentially, as an advocate for the space, I wanted to let the average investor know that this was happening. And what was interesting was that that same firm took the exposure down on those two ETFs to 2x because they couldn't keep up with the price action that was happening in 2020. So that's a good lesson, I think, for some of your listeners, is that ETFs are tough. Like a natural gas one just went under this year that was trading a ton of volume, right? It wasn't the volume, it was just the issuer, the company that was in charge of that ETN or ETF just decided to fold, and they gave the money back to the shareholders. But what if you're down 30 or 50% at that point? You're just going to get a check back in your account and there's no recourse, right? So it was a really unusual period of time. I had a couple of large podcast hosts like yourself contact me in March of 2020 and say, hey, that took some guts to expose this company. Would you like to come on our show? And I started to do podcasts, and I was lucky enough to have a lot of intelligent, wealthy people trapped in their homes, and basically was able to garner a decent following. And fast forward to today, we're doing quite well because we've been, we haven't been talking our book, Rich, in the sense that, like, when I was on Kitco in March and in June of last year, doing interviews at conferences like PDAC, I was telling people, look, this is probably going to be an interest rate cycle that lasts longer than you think. That clearly isn't talking your book as a mining guy, because many of my competitors were talking about rate cuts as early as September, October of 2022, which clearly didn't happen. So what we try to do, Rich, is always tell the retail public what we see, better or worse. Like, it doesn't matter to me if it's going to make me money personally or even make my followers money. We're trying to observe things and try to keep the average investor in what they're invested in. Because if you don't do that and bought, let's say, March of 2020 or June of 2020, chances are your prices are much lower today, right? Because it's been almost a 3-year downturn. So, we try to tell people, look, if you made an entry point that was incorrect, we do that all the time. Our first buy on something isn't necessarily our best effort, but we buy 3 to 10 times usually. And if you buy that many times, you get a blended average cost that is reasonable. And, we did this with one we'll talk about later, but my average entry point on that was 11.5 cents. We doubled everything last fall at 3 cents. So our blended cost was 7 cents, and now that stock is trading at 12. So we're able to dispose things, at a profit as opposed to breaking even, right? And just to finish the thought, we have a website, FenneckConsulting.com, that basically talks about our newsletter, which we started about 2 years ago, Feneck Commodities Report. We cover all commodities in that, so it's not just gold and silver like so many of my competitors. We talk about nickel, we talk about palladium, we talk about copper, we talk about energy. So hopefully some of your listeners will take a look at that. We also offer a real-time update service, and that came in really handy this week because pre-CPI, we had emailed everyone when GDX was at 29.80 and said, look, this could go either way, but you have to be ready, because if we get a really low CPI read, which we did on Wednesday morning, the 12th, the US dollar is going to tank because it was already in a downturn, and our sector would likely get a bid, which it did. So, it's little things like that where, people are, I know it's hard to pay for advice in a market like this for mining services. However, I think that is a good example of people getting a heads up on something that, maybe they wouldn't have if they weren't subscribers.
You know what? That reminds me so much of an ETF I bought called oil. I don't know if you remember this ETF, but I bought this oil ETF when oil went to minus, and I thought I was going to make a killing, and I should have, because oil went from minus to $130. The oil ETF went bankrupt, gave me my money back at a loss, and then the price of oil skyrocketed, and I was so frustrated because I was like, man, I made a perfect trade. Right. But it wasn't a perfect trade because the company went bankrupt because oil went to zero, and then oil went to 130. And had they not gone bankrupt, I probably would have made like 5 to 10 times on my money. Instead, I got a little check, I got a little payout, and the company, folded. Literally, the symbol was oil. I don't know if you're familiar with that one.
Yeah. Yeah, I never owned it, but I'm aware of it. And, I had one recently, GAZ, that did the same exact thing. I think it was a Barclays product. Barclays is a big name, and as an investor, you think, hey, I'm going to be able to make that money back, right? Or in your case, you made a great entry point. Why not? Why shouldn't you get paid, right? But the timing, according to that issuer, was not aligned, and so there's a lot of things to look for. I remember, gosh, I think it was August of 2015 or 16. There was just a blip there where the ETF market just crashed for about 30 to 45 minutes. I don't know if you remember that, but I happened to be at my desk that Monday because the Chinese market was down 8% on a Sunday night. Wow. And I knew it was going to be a really rough Monday, but I didn't think that market makers would back away from the bid that hard. I literally bought an S&P 500 ETF. I think it was State Street's, down over 25% in the first half hour of trading, and sold it the next day for that same profit, because there was this really weird anomaly where market makers just backed away from the bid for nearly an hour, and it was just like catching a falling knife. So that really woke me up to the ETF world. I've spent a lot of time in the ETF world. I worked for a top 10 provider in ETFs. So I know that, when I went to my boss that day, as I actually was working there at the time, and I said, what are we preparing, to put out in terms of a press release about this? And they're like, we're not going to do anything. And that also told me that, not everyone in finance has an investor's back, right? And that's why I wrote that article in March of 2020, against a different firm like that, because I think, investors put too much trust in these companies. I worked in that sector for 25 years, and they just don't care about the little guy, in my opinion. That's just my opinion. But if you really want to play it safe, I always would tell people to gravitate towards like a BlackRock or a Vanguard, like a really big name that is not going under, right? Like there's no possible way those would go under in a normal scenario. They're just too big. So maybe put your money in ETF land, with carriers like that instead of just some of the smaller players.
Have you ever heard of COMT?
No.
Take a look at COMT. It's number one investor is BlackRock. I've invested heavily in it. I've got 6 figures in it. They pay a 30% dividend.
How's that?
It's amazing. I mean, it's a 30% dividend. It's an oil and gas ETF. They mainly are oil and gas. And I felt like because oil and gas was down this year, this would be a good time to buy in. Oil's been bouncing between 65 and 80 all year. I think it's around 75 right now. Mm-hmm. And I just thought everything else is going up. Oil and gas is going down. This is the time to invest in oil and gas. I feel like over time, oil and gas and commodities will just go higher. So I put like 6 figures in. They pay out one time a year at Christmas. And I figured like, wow, okay, well, if this works out well, at the end of the year, I'll get 30 grand at Christmas time. And I could use that extra 30%. And so it's my first time in it. I'm like 7 months into it. I get my payout at Christmas. And if it works out well, I'm probably going to roll in another couple $100,000 for next year, because I've been telling to all my friends about this. And I'm like, man, imagine if I put 300 grand in this one ETF and it pays me 90 grand a year. I mean, that's more than what the average person makes. Now, there's no guarantee they're going to pay out 30% a year. They might go down at some point, but the reason why I really liked it, I did a lot of research, because you don't just put 6 figures into something unless you really believe in it. But like you said, the number one investor in the ETF is BlackRock. So I thought BlackRock's the largest institution in the world, 10 trillion in assets. If they're going to put a huge stake into this, chances are it's not going to go bankrupt like that oil ETF I bought. So I was like, you know what, let's give it a shot. So I've been in it, like I said, for 7 months. At Christmas, I think at December 16th is the payout. So I'll get a chance to see what it's like. And if it works out the way I think it will, it could be a phenomenal dividend paying ETF. It's an iShares product. And like I said, its number one holder is BlackRock. So definitely take a look at COMT. It's one that I really believe in and I really, really like. And like I said, it's got the highest payout of any dividend stock I've ever seen. I've never seen anything pay out even close to 30%. Have you seen anything pay out that much?
No. There's got to be something that's driving that, and I'd have to take a closer look, because They may have the prospectus ability to buy, partnerships or something where you would get that kind of a yield, because the average, large cap oil and gas stock is probably 3 to 5%, right? Like it's not going to be
Yeah.
30. So
It
there's
blew my
something
mind.
there.
And I was like, how can they afford to pay a 30% dividend? And I thought about it, I was like, maybe they just made so much money last year with the price of oil exploding that they have all this extra cash and they're just trying to get as much investor money as possible. Honestly, I don't know. But I
Yeah.
thought that maybe it would go down. It actually went up. It was at 30. Now they're paying out 32%. I was like blowing my mind. I'm like, where are they getting the ability to pay out such high returns? So I'd love to
Yeah.
get your input if you get a chance to take a look at it. That
One
leads me to
easy
my
way
next.
to
Sorry, go
Yeah,
ahead.
sorry, Rich. One easy way to do that, let's say they have 50 holdings, and if you've got, some spare time on your hands, go through some of the major holdings and just look up the yields. And if it doesn't really add up, meaning like it's like 2, 3, 4, 5% yields, which it probably is for most of the holdings, then you have to figure out like, are they using leverage in the portfolio, which is probably legal, but only to a certain percentage. And, how exactly are they attaining that? It could be a special dividend. There's something. I'll just have to take a look and get back to you on the next interview.
Yeah, definitely take a look. COMT.
Yep.
Now, lead me to my next question. So, in your opinion, what is the hottest commodity investors should be paying attention to right now?
Yeah. Gold is leading the entire mining complex, right? I don't care what anyone says. Everyone looks at gold first and everything else second in mining, for better or for worse, right? And I've talked to many nickel CEOs. They say the same thing. Like, it doesn't matter what nickel is doing as much as it matters what gold is doing. That said, we own zero physical gold at the moment because of the price. If it were back at 16, 1700, we'd be owners. But as value managers, we see, gold is like, hey, we want to see it break 2100 an ounce with some authority. And then, that would be interesting. But here at 1954, I'd much rather own silver in the 24s, right? Versus gold, between 1950 and 2000. And that's what we do. So we own a top 3 position in silver. And that's both physical and through the ETFs. I think that's the most exciting commodity, when you look at the next 12 to 24 months, because it's just been an awful ride for investors for a couple of years now. But you have to look at what could drive things differently, right? I get this question all the time, like, what would be your opinion of silver? Is it a precious metal or an industrial metal? And I'd say it trades differently in different scenarios, right? In the scenario we just saw July 12th with CPI, dropping, gold and silver pre-market got an immediate bounce. So that's your answer right there. It still trades like a precious, which is great news, because that's exactly how you want to see it trade, right? You want to see it trade like a safe haven asset, not something that's going to be a bullish asset when the economy takes off, necessarily, in our opinion. So I think silver could go past 25 here pretty easily. It tested it on July 14th. And then once you get through 25, you're looking at 26.50 to 27. And that's a nice little, move there, another 6 to 8% move. But what does that do for silver equities? There's usually double to triple, leverage for a silver equity that isn't hedging, right? And that's why we're buying silver stocks more than, just buying, any type of commodity right now. We think there's a lot of upside in the equities, whether it's gold equities, silver equities, et cetera.
I like that. I'm a big fan of gold. I'm a big fan of silver and precious metals and commodities, oil and gas. Obviously, I've made that oil and gas ETF investment. I like that strategy. I think that's very sound, because I do feel like silver has lagged. So there's definitely an opportunity there. Now, going into my next question, what are the top 3 things you look for when you're deciding to invest into a mining company?
The first thing is obviously management. I know Rick Rule says the same thing, and a lot of smart people say that, and it is true. You really have to get to know who's working at the company, know what their goals are for the company. Are they 30 years in the business, or are they 10 years in the business? That matters, right? If you've seen multiple cycles like 08, 09 and 00 to 03, you can navigate, you can manage your cash position better. Because right now, I've been encouraging people since last January, hey, this is going to be a tougher ride than you think, Mr. CEO. you want to probably cash up as much as you possibly can if you're going to have aggressive drill campaigns, because money is going to become harder and harder to come by, not because of a credit crunch, but because of a lack of interest in our space, maybe, right? And that's where we've been up until July 12th and arguably March 8th when the financial crisis started, in my opinion. This has been a really interesting year because we've had two landmark events like that, with the financials really turning over in March and now CPI coming in closer to the Fed's target July 12th. The next, thing for me would be, we can talk about this later, but it's August 22nd through 24th with the BRICS meeting. And I think that could be another catalyst for our sector. But getting back to your question, management, number one. Number two is really discerning, is this management team and team of geologists, are they trying to build this mine for real, or are they, trying to prove it out with a bunch of drill holes so that they can sell it to someone? That's something that you kind of have to figure out for yourself as well, because let's say it's the former where they're trying to build it, right? A lot of things can go wrong when you take it from today, 10 years later. No one has a crystal ball. If you did that 5 years ago as an explorer, you never thought COVID was going to disrupt your plan, right? But it did. And so then what do? You have to pivot and you have to be creative. And it's a long ride for investors, for the people that want to take it all the way from really small explore code to production. And in many cases, it's way more than 10 years. But I'm just saying, I prefer companies that are going to, drill, build the resource out. Like if you're a gold company, we want to see 2 million ounces or more. Silver companies, we like to see over 100 million ounces a lot of times, because we want to see that huge land package or resource, because majors and mid-tiers look for that, right? The whole idea is to attract someone to your project. And these companies are smart, Rich. They're not going to, a Newmont and an Agnico are not going to spend that money for you. As a junior Explorco, you're going to have to spend the money and prove it out, and then they're going to get interested, right? So, it's you have to look at both scenarios and say, am I patient enough to see this project through, or am I in this for 1 to 2 years, where basically this company is trying to drill and get some really good results, get a JV partner interested at 9.9 or 19.9, or just get completely bought out. And the third thing I would say is jurisdiction. Jurisdiction is super important. People think the U.S. is a great jurisdiction. Well, yeah, it is. But look at California versus Arizona. Totally different. They're bordering states. Arizona is way easier to mine in than California is, right? So there's been a number of disappointing places globally. I would say the most recent one that's kind of big is Mexico, where if you've got your permits and you're producing, you're pretty good. But if you're an Explorco right now in Mexico with no permits, it's going to be a much longer road with this current regime. So it's that kind of stuff where, as an investor or a portfolio manager, you have to decide, has my thesis changed on this, right? And that's what I think a lot of investors don't do. They do this, oh, well, this is going to work out because XYZ. No, that's not a plan. Like, the plan changes constantly, like literally all the time. So, we're not set it and forget it kind of investors, Rich. We don't really believe in buy and hold in this sector. I'll tell you why. If you look at GDX, right now trading, let's say between 31.50 and 32. Well, it closed June 30th of 2020. I distinctly remember this, right around 32.50 a share. So that means that, let's just call you're flat, right? You're flat for 3 years holding this same ETF. That's not an investment strategy. Like holding something for 3 years, you should make a return.
Absolutely.
Right. Interest rates are up significantly during this same 3-year time period, where you can have a risk-free rate of 5% in the bank right now if you're smart, right? So why be loyal to an ETF if it's not going to perform? You have to be able to sell. And so we do a really good job of holding core holdings, but we're going to trade on the periphery, where we're just cold as ice about the names. We don't care. We did this week with a silver name, right? 2 weeks ago, I bought it at 17 cents. We unloaded everything between 23.5 and 24 this week. Is it the biggest gain ever? No, it's a single. It's not a home run. But we made this money in 2 weeks. I mean, it's like, it's a gift. Let's take the gift and rotate that money into some names we have higher conviction in.
I think that that's a great strategy. Now, actually, you touched on BlackRock, and I just want to go back and ask a question, because there's a question from the community here about Bitcoin. What's your opinion on Bitcoin as a commodity? The SEC just came out and said that Ripple is not a security, and BlackRock is filing for a Bitcoin spot ETF. So I know you're a commodity expert. Do you believe in Bitcoin? Is Bitcoin something that you're interested in at all? Is it something that you stay away from? What's your feeling about Bitcoin as a commodity?
Man, I'm probably going to get shelled on this one. I think, from working in large institutions like Merrill and JP my whole career, you're taught to like really focus on things that are kind of down the center. And in that case, Bitcoin is not the most attractive investment because it's an unregulated business, right? And I'm not just talking about Bitcoin. I'm talking about Ethereum and all the other cryptos, right? They're unregulated.
Yeah.
I actually pointed out to the Sprott team in 2017, I believe it was, and I always get trolled for this. You can go back and Google search it, though. It's on the web. I believe it's still there. It was an article talking about Ethereum going from 300 and change to $1 in a single day. Do you remember that? I don't know.
I do.
Yeah. So, okay. So I'm glad someone has my back on this. But the story was a trader that basically put limit buys out there at 100, 75, 50, and 25 and thought he was cute, and then got filled on everything, right? And then he's like, well, wait a minute, Mr. Ethereum. He's like knocking on the regulator's door. I want to cancel those trades. And they're like, you own that now, right? Like, so the next day it bounced into the 200s and he made a ton of money. But what if you did that on margin and it's stuck down at, $1 or $25 or $50 for a couple of days, you're out. Like you're margined out.
Yeah.
So it's like, it's a dangerous, margin's dangerous. You need to know how to use it. I think there's a lot of people in spec kind of plays that are over their skis right now. And to that point, I think Bitcoin is the biggest and baddest, obviously, of the crypto market. It's something we're tracking, but I want to see another shakeout, and I think we're going to get it. The fact that BlackRock is in this business now is absolutely a bullish thing for crypto, because if anyone can get it pushed through, it's going to be them, right? So, like, I think, it's a wait and see thing for us. It's not something I can put into a mining portfolio because that's sort of cheating either way. So, I'm observing, but with interest.
I think BlackRock's record is 575-1 with products that they filed with the SEC. So there's a very good chance that this Bitcoin spot ETF will get approved just based on their history.
Yeah.
And that will, like you said, it will essentially, if they do approve this, it will essentially revolutionize the way investors look at investing, because someone like yourself that is really heavily into commodities has never really, I'm sure, looked at Bitcoin as a commodity, but it's now being looked at by many as a commodity. I mean, Larry Fink came out and said that Bitcoin is essentially digital gold. I mean, this is the guy when it comes to BlackRock. So that's a big statement. So, I mean, I'm a big fan of all investments, but I also own Bitcoin, and I'm a fan of the technology. I'm a fan of the ability to send money to people that are unbankable. I'm a fan of the ability to send money to someone instantly, almost with no cost and with no banking involved. I love decentralized business. So there's a lot of cool things that I like about it. Is it risky? 100% it's risky. I mean, I've seen Bitcoin, since I've been investing in Bitcoin since 2017, I've seen it go from $1,000 to $20,000, back down to $3,000, back to $69,000, back down to $15,000, and today we sit at around 30,000. So it has been a roller coaster, to say the least. But as just
that's exactly it. That's a good point, though. I mean, how many people? There's a saying out there, Rich: investor return versus investment return. If you bought it at, let's say, 1,000 and you're at 30,000 now, that's a great return, right? Like, I mean, incredible. It's an insane return. But what if you just got your entries wrong? Right? You bought a lot. You didn't buy it at 69,000, but you bought it at 50. Now you're at 30. Well, you're down 40%. It's like now you're saying to yourself, do I hold this? Is it ever going back to 50? Like, that's why we advocate, whether it's Bitcoin, commodity stocks, anything like, FANG stocks, you have to buy multiple times, because buying once and just sitting back in your chair, that's not a strategy. So many people can get that wrong.
I agree with you. I'm a big fan of lower cost averaging,
Mm-hmm.
and it's almost impossible to buy something once and get it right every time.
Right.
I don't think anyone can really do that. But your strategy of lowering your cost is similar to mine as an investor. I'm always trying to lower my cost. If I really have conviction in something and it goes down, I buy more, I buy more, I buy more. And then when it has a pop, if I want to get out, I can get out. And that's a very good, smart, sound investing strategy, as long as that asset doesn't go bankrupt. And that's it's happened to me. Like when I talked about that ETF, that oil ETF, which to this day still scars me, because I was right on the trade because oil went from minus to $130. I just didn't have the foresight to see that the ETF was going to go bankrupt. But I should have, knowing that the fact that oil was going to zero, I should have thought, well, maybe this ETF might go out of business. It didn't even cross my mind, because as an investor, you're always thinking buy low, sell high. You're not thinking of the worst case scenario. But as an investor, sometimes you should be thinking about the worst case scenario, because it'll protect you from those types of scenarios. So great points there. And that leads me to my next question. Which large cap stocks have you been paying attention to in 2023? I'm a huge fan of large cap stocks. I've invested in a lot of large cap stocks myself currently. I'd love to hear which large cap stocks you're looking at right now in 2023.
Yeah. So, to be honest, most of our stuff is in the mid, small, and micro cap space. But what makes us different is that we're not just a micro cap and portfolio. We definitely invest in the larger stuff. We do that through what we call like a hub and spoke structure, where the hub is going to be GDX and things like that, and that would encompass some of the larger cap names you're talking to. And then we have spokes all over the place in terms of some Explorcos, some royalties, some mid tiers, stuff that's on the periphery that we like. The larger stuff, I think Newmont's interesting with their dividend right now. They've got the Newcrest deal behind them. Stock traded really well this week, and it's still very, very, very low compared to its 1 or 3 year highs. Agnico Eagle, AEM, really like them. They're a very conservative shop, and I think they're well positioned in the silver space. Pan American's been pretty interesting. If you look at the 3 major silver ETFs right now for equities, they are SIL, SLVP, and SILJ. All 3 of them own over 10% in PAAS, which is Pan American. One of them owns like 22%. So wow. I think you're going to get a nice pop in PAAS if you get flows into the silver equity space, because naturally people are more apt to buy the ETFs than they are the stock. But you're going to be, as those ETF managers, they're going to have to buy more and more Pan American just to keep up. I saw that happen with Newmont a couple of years ago, where it was a large holding in GDX. It was over 10% of GDX at that time. Feneck, the manager of GDX, just had to keep buying more and more Newmont shares, right? So those are some names there. We think that maybe even Silvercorp in the silver space. We've owned that since 2016. SVM. They're very well diversified, and I really like the story in general. I like management. I met with management in November of 2022, and felt much more confident in what I was doing. And that's another thing we can just throw in here, Rich, while we have that topic is, since 2008, I've been on the horn with people like the CEO of Silvercorp. I started with, AG, CDE, HL, like all these silver type names. I would cold call those CEOs when I had no track record. I had hardly any money, and I would just call them and ask them questions as a former analyst, right? And I wouldn't bother them. I wouldn't keep them on the phone for 10 minutes, but I would just say, here, I have 2 or 3 questions, and bang through it. And and come across, come out of that call feeling more confident or less confident, right? Because as an investor, you have every right to call these companies and just try to get whatever you can. But if you don't have the time to do that, which is usually the case, I would strongly suggest working with someone like myself or a competitor that is doing that work. I talked to 13 CEOs this week. It's a lot of work to get 13 CEOs on the phone. It's probably 20 or 30 texts and calls and emails. And it's just like trying to connect and get that information out to my network. I think is extremely important. Now, also, a lot of times people will try to give me more information than I want. And I always tell them, look, I want to be able to buy your stock. Please don't, tell me anything that's non-public, because I'd rather be a buyer right now. And so it's important also to kind of, just make sure that as an investor, you're not getting something that's, non-public. So anyhow, I think it's right now, you don't need that kind of an edge. You just need to do research on what you want to buy. Like you had pointed out, large cap names are a certain type of name. Explorcos are on the other end of the spectrum. They've got years and years ahead of them. If you're a Newmont or an Agnico, you're producing, right? You have to think completely differently about that investment. You're thinking about what's the price of diesel, because diesel is a major input into their bottom line, right? Because they are producing and they're using that energy. What about like Peñasquito recently for Newmont, right? Like with with what's happening there, that wasn't expected, I guarantee you, in the first quarter of this year. So you have to understand what percentages of Peñasquito, of Newmont's production is Peñasquito. If it's 3% or 4% or something, it's not that meaningful. It's not a big deal. You can still buy the stock. But if it's 20%, that's going to change your thesis, right? So like, there's a lot of things that can go wrong in mining. I always try to ask questions about what can go wrong more than what can go right, because I want to know the whole story.
Those are great points. And I don't know if you've noticed, we've done 300 CEO interviews here.
Yep.
So I've talked to hundreds of CEOs. And that's everything from large cap companies, NASDAQ companies, New York Stock Exchange companies, all the way down to small caps, OTCs, TSX, TSX Venture, CSE, small cap companies. So literally everything from small cap to mid cap to large cap, and everything in between: commodities companies, electric vehicle companies, tech companies, cannabis companies, oil and gas companies, you name it, we've done it. And everything you're saying is 100% true. And I remember when I first started doing this and talking to CEOs, I would listen to everything they said. And I'll be honest with you, a lot of times they led me down the wrong path, because I didn't realize that they're trying to sell their business, right? So sometimes when you listen too much to them, it can actually be a hindrance, because they're always going to sell their business. They're always going to say that their business is the best thing since sliced bread. They're always going to talk about all the reasons why you should buy their stock. They're always going to talk about all these great things that they're doing. And they rarely, especially when you cold call them, are going to say anything negative.
Right.
So as an investor, anyone that's watching this, I want to remind you guys that everything we talk about is strictly for information and education purposes. Just because the CEO says we got the best company since sliced bread does not mean the stock is going to go up 100%. I promise you that, because I've heard it 1,000 times.
Sure.
However, if you ask the right questions, like you said, you can get a feel for what's going on with the company. You can get a good vibe, but you still got to do the due diligence. You still got to read the press releases. You still got to read their financials. You got to understand their debt to equity ratios. You got to understand the assets on the balance sheet. You have to be able to understand, you got to be able to kind of do forward looking when you're making an investment. You got to be able to kind of see, okay, where are they today and where are they going to be in the next quarter and the quarter after that and the quarter after that. As investors, that's what we do. We're looking at a company and we're trying to see where they're going to be in 6 to 12 months. And I'll give you a great example. Last year, when the market crashed, I heavily invested in Tesla, Apple, Google, Shopify, what else? On every one of them went up. And it wasn't like I'm the greatest trader of all time. I just looked at the chart and I said, wow, okay, well, everything is down in 2022. What should I buy? Let's start with the biggest companies in the world. And I bought the Googles and I bought the Amazons and I bought the Teslas and I bought the Apples. Every single one of them is up this year. Now, the only mistake I made was I went on vacation to Europe and I was like, oh, well, I need some money to go on vacation. I sold them all. I made money on them, but had I held longer, had I held till now, for example, I would have made way more because I didn't anticipate that they would go up as much as they have this year. It's been unbelievable. So I agree with what you're saying. Invest in great companies. Try to call the companies if you can. Get to know the companies. Get to know the CEOs. And if you see a great company and you see that it dips, that's the time to buy. And another company that I wanted to mention that you didn't mention was Barrick Gold. I bought Barrick Gold this year. Earlier in the year, I think it was at 15, maybe 16. And then it made a run up when gold went to 2000 to about 2021. I sold. And now I saw Barrick is back to 17. And I'm like, maybe I should buy it again. I'm thinking about it, because I see gold hovering around that like 1960 mark. And I'm thinking, maybe we get another run back to 2000 and maybe Barrick makes another run to 20, 25 bucks. I don't know. What do you think about that? You think that gold has more room to run? Because it feels like every time gold gets to 2000, it sells off. What's your opinion on that? I'd like to know.
Yeah. So it came within $5 of the all-time high this year. And so, clearly that 2050 plus kind of range is resistance.
Yes.
And you need to break through that with some authority. I personally feel that is possible August 22nd through 24th if the BRICS, group basically announces an alternative currency to the US dollar. You already are looking at the US dollar in decline, which is awesome for our space. The Fed is July 26th. We'll see how the dollar reacts to that. But the next major thing in the road is going to be BRICS August 22 through 24. And then interestingly, Jackson Hole, Wyoming symposium right after that. So it could be a whipsaw. I don't know. I mean, because remember, the Fed's got their own thing going, right? They don't care. They're yes, they care about an alternative currency, but I know Powell from hearing him like every single time speak. I really do pay attention to his words, and he is a very pragmatic guy who's basically going to say, well, yes, the BRICS did XYZ, but we're going to do ABC, and we're not necessarily as focused on that as whatever. It's a major problem for the US dollar if Brazil, Russia, India, China, and South Africa start to do their own thing, right? It's a problem.
And I hear there's like 40 other countries that want to partner with them
Right.
too. So it's not just those 5. It could be Mexico and a whole bunch of other countries that are talking about joining as well.
Right. And so the real question is, what is that backed with? Is it 2% gold, 3% gold, 5% gold? I don't know. I mean, we're going to find out. Maybe it's nothing. But I seriously think there's a nice probability that there could be an announcement then. And I think the broad market is assigning a 5 to 10% probability of that at this moment right now. So as a value manager, you have to take calculated risks, right? And that is a calculated risk. I want to buy juniors. I just said this on Charlotte McLeod's show, INN. I want to buy juniors in July and August when everyone is asleep at the wheel and on vacation with their families. And then basically have August 22nd work in my favor. And then you've got the 2 biggest U.S. mining conferences in September, right? They run from September 12th through the 20th. So you get a nice bump there going into October, November. I think this could be a great setup. And so that's why we're bullish right now, which if you've watched our work on shows like yours in the past, we've been very guarded and heavy cash. We're not over our skis at all. We're still probably 8% cash as we sit here. But I could see us getting to frictional cash, between now and August 22nd, if the Fed, doesn't throw us any curveballs July 26th, which, by the way, right now is showing a 92% probability of a rate hike. So once we get those kind of things, Rich, like you saw on the last in the last Fed meeting, it was a 91% probability, I think, of a pause, right? So it's like nice going into meetings like that. You don't have to worry about the 2 o'clock Eastern announcement. But you always have to worry about the 2:30 press conference because Powell is being watched extremely closely by the markets. Markets are near or at all-time highs, depending on what you're looking at. If he throws a curveball in there, at any one of these meetings, the broad market could, take a breather, and that's what we're always watching for. So one of the things we advocate is, setting these things on your calendar. The Fed meetings aren't like every week. There's only a couple of them a year. So set that on your calendar, set CPI in your calendar every month, non-farm payrolls every month, GDP every month. You saw what happened when GDP red hot recently. You know, the estimate was 1.3. We got a 2% read. That's a major disparity from what was expected. These are things that move markets, and they move the mining sector too.
Yeah, and we're down to 3%. So I mean, it was funny. A year ago, almost to the day, inflation was at 9%.
Yep.
We've got it down to 3%.
Yep.
So I mean, man, they've done a good job getting it back under control. We've seen other countries like go bankrupt essentially because they couldn't get their inflation under control. Here in Canada and the United States, we've done a good job getting it under control. We're at 3%. So I do believe there's going to be 2 more rate hikes. That'll get us to that 2% number. And then hopefully then we pause, and then hopefully then we start reducing the rates. Now, I think that would be a huge boom for the market. And then continue with some more questions. What is the most common problem you see with junior mining companies that lead them to not being successful?
Well, you can't protect against lying. I've been lied to a number of I've been lied to a number of times in my career, and you just hope that you have a small enough position that it doesn't affect your net worth that much. I'm not going to name names right now, but there's been a lot of stuff that's going on in the mining sector in the 7.5 years we've been running money, and I can't believe some of the things I've seen. So I've said this probably 3 times already today, but for a 4th time, you have to do your research. You've got to be careful because, I mean, like any sector, there's risk. Okay. I mean, I remember technology in 2000. I owned this company called Sienna. I don't know if you remember it, but it was a high like flyer at the time, like top 20 tech name. And they came out pre-market and they said, we lost a customer today. And I think the customer was like an Intel or something, right? And then the stock was down 25 or 30% that day. And I was like, what the heck happened? Wow. Well, I found out that was 20% of their entire revenue stream. So you have to do that homework. I didn't do my homework. I was much younger then. I didn't really do that same kind of homework that I do now. And that woke me up to like, wow, even like these high flying names can get taken down from time to time. And so yeah, the first thing is what is the character of that management individual that you're talking to? What is their track record? Is their track record good? Have they had a series of successes in their career? To me, it's not just being in the business 30 years, Rich. It's like, what have you done in those 30 years? You have a couple buyouts in those times. Then that's great. Like, I mean, if you've led people from, hey, I bought this for 30 million and dumped it on Kinross for 140 million, then that's awesome, right? Like, I want to know what your next project is because you just made me over 400% on my money. But if you've just been like doing the same thing over and over again and expecting a different result, like that to me is a challenge. And that comes to my second point, which is, management that puts 100% of their private placements into the ground and doesn't do any marketing. If you've invested, if you've had that many CEO interviews, I bet you've run across people like this, right? They're like, hey, we're going to just drill the heck out of this thing. And they have a crap website. They've got a crap, public relations kind of thing going on. They don't do any conferences. It's like, that's not a strategy either. You have to really 100%. Hit on those drill holes, right? That could happen, but it doesn't usually happen, right? So like that's, to me, it's a combination, finding that combination of marketing and good, geologists that are in the field doing the work. And that can get you to a better place once the environment gets better as well, right? Like if you look at the summer of 2020, a lot of juniors got bids that shouldn't have gotten bids. It was just a rising tide lifting all ships. So that's kind of what I'm saying is like you want a position with companies that are real juniors if you're into the junior space, because once that tide rises again, and I think that's going to happen once gold can break through that 2050 mark into the 2100 plus range, that's your catalyst to be like, this is go time. Or when silver breaks 30, either one of those are major hurdles for me. But you want to buy now. Like why wait for the inevitable? That is going to happen, right, in the next 1 to 2 years, in my opinion. So why not now put those positions on, hold for a year and a day, get the long-term capital gain? I mean, like don't buy into the market when gold's at 2100. Buy in right now.
I agree 100%. But unfortunately, so many investors love to chase And I'm the complete opposite. When everybody's chasing, I love to be selling. And when nobody's paying attention, that's when I'm buying. And that's what I was doing last year. I was buying all the best stocks in the world when everybody was bashing them. I really wish I bought Meta. I just couldn't wrap my head around them because they were getting into the metaverse, and they went from like $80 and now they're like 300 plus. Crazy, just crazy how stocks have gone berserk this year in a year where everyone is predicting a recession. So it's just funny how the market works. And that's why I really believe that time in the market is always more important than timing the market. It's something I'll always believe. And that's why I invest, and I'm always invested, and I'm a diversified investor. And it leads me to a couple more questions before we say goodbye. Do you think nickel will ever surpass lithium? And we know that, you know, the EV industry is huge right now and is only going to get bigger. Do you think there's a chance that nickel could become bigger than lithium in the EV industry?
It's possible. I mean, I think we don't make predictions more than like 6 months out because things change so quickly. I mean, we just don't do that. So I can't really answer it directly. I can just say that I own some nickel companies and some lithium companies. And the nickel companies we own, you know, some that come to mind, like Stillwater Mining, Stillwater Critical Minerals is the exact name. We own Premium Nickel, and we own Fathom Nickel. I mean, we own some names that have done extremely well or are in uptrends. And in the lithium space, we like large land packages. That's kind of what the game is right now to me in the lithium junior space. Is it's get a large land package and have it in close proximity to someone who's way bigger than you, right? One of our holdings, Champion Electric, did that. They pivoted last September and bought a huge land package in Canada, very close to Patriot. If you know Patriot, PMET, it's one of the best mining stock charts in the last 5 years. So
fire.
Exactly. And I in full disclosure, I've owned 0 Patriots, so I completely missed that. But
I've had them on my show. I've had them on my show.
Yeah, I'm not going to chase it because it's already like multiples ahead, right? But with that stock I'm mentioning, Champion Electric, that was the one I talked about earlier in your show. So we bought originally at 11.5. We then doubled our position at 3 last fall because there was a huge seller out there. I talked to Jonathan Buick, the CEO. He's like, yeah, it's this entity, ABC, and we've identified who it is, but they're just selling for tax purposes. And it was just an iceberg at 3 cents US. So we basically picked up another 1 million shares there. And now our average cost is 7 and the stock's trading at 12, right? So like that's making money. And we think the stock has a lot more upside. It hit 16 this year. So, you know, another lithium junior that reminds me of that in a completely different jurisdiction is Spark Energy right now. They are much smaller, but they're in Brazil, and they have you know, a major right near them as well. And you know, that's the kind of stuff that we look for, right? You know, these companies are acquiring these huge land packages really close to someone who's way bigger than them. Well, if Patriot's having all this success, don't you think that they would be interested in Champion's land at some point? I mean, it's just you know, basic thought. It's never a guarantee. There's no guarantees in this, but it's a calculated risk, right? And so that, you know, we're to answer your question, you know, we're in both. We love nickel and we like lithium.
Great. I like them both too. I really like lithium. Like, I just feel like with electric vehicles being mandated by countries all over the world to have like 50% electric vehicles. Some countries want 100% electric vehicles by 2030. I just can't see how lithium isn't in the forefront of everyone's mind as an investor. It just seems like such a great time to be investing in lithium. And I got one more question for you. Let's get into other market conditions. Do you think we're heading into a market with more liquidity, or do you still see the economy struggling going into 2024?
When you say liquidity, do you mean like the mining space or the broad market, or?
I just mean in general. I mean, it's been a weird year. It's been a good year. Obviously, the market's done really well. Do you feel like this liquidity is going to continue, or do you feel like it's going to get bigger, or do you think it's going to slow down at some point? Because I'm starting to wonder, like when I talk to investors, there's still a ton of investors on the sidelines. So I'm starting to wonder, like, is this mostly institutional, like this run this year? Is it a combination of institutions and retail? Because as much as I'm investing, when I talk to a lot of my friends, they're not. They're on the sidelines. They're not sure. There's a lot of people. There's a lot of retail that's still sitting on the sidelines with cash. Do you see that changing? Do you see like more money coming into the markets? Like, what are you seeing? Like, what are you feeling like going into 2024? Are people going to be investing more? Are they going to be investing less? I think a lot of people got scared. Like they were told. We were all told that 2023 was going to be a recession. So I think a lot of people got into cash last year and have been sitting on the sidelines this year waiting for an entry, and everything's been shooting up. So, like, what do you think? You think that this liquidity event will continue? Do you think it's going to get bigger? Do you think it's going to slow down? What's your opinion on that?
I think it's largely institutional driven this year and even parts of last year. And the reason I say that is because I look at the screen 10 to 12 hours a day, and I can see when mutual funds or ETFs are buying something because I know what to look for on level 2 quotes. And I think you are seeing a melt up right now is the best way I could put it, right? I mean, now the CPI news Wednesday, that's real, right? Like you can get behind that as an investor, as a money manager. But why was it melting up that much before that, right? Like it's sort of like we're so deep into a bull run here. I'm in the camp that the low was March of 2009, and so now you're in a 14.5-ish kind of bull run with minor pullbacks in 2018, 2020, et cetera, right? 2011. So it's not like, I mean, if you look at a chart, it's like this, right? A series of higher lows on the NASDAQ or something like that, right? So what will derail that, in our opinion, is you want to keep an eye on stuff like non-farm payrolls, right? I mean, the ADP number recently came in on that Thursday. I think it was, the 6th of July, really hot, like more than double what they expected. But the next day, the non-farm payrolls number missed. And if you see a bunch of non-farm payroll numbers missing in the U.S., that's going to indicate to you that, maybe they're in GDP missing. Those two things would be interesting to see where the U.S. economy could be starting to falter a little bit. Obviously, keep an eye on earnings and all that. But I think, look, we're only about 10% in the broad market right now. We got out too early. We didn't see it melting up to this level. But I'm okay with missing that because my expertise is really in energy and mining. So when I look at those two sectors, there's so much opportunity right now that I'm really, really excited. I mean, I tell people this all the time. Like, there's been times in my career, like in 2016, I lost a lot of sleep. I don't lose any sleep right now. I know that this is going to work. It's just going to take more time than the average investor wants.
Yeah, I kind of agree with you. I think it's definitely been a market melt up. Like you, I sold earlier thinking that things couldn't keep going higher, and they just keep going higher and higher and higher. So now I feel like, for the most part, like everyone's talking about the big 7. There's 7 stocks that are leading the charge, right? The Metas, the Googles, the Amazons, the Apples, the Teslas. Those are part of it, right? These are the biggest, strongest tech companies in the world that have really been leading the charge. NVIDIA's, they've all done really, really well this year. But it's like, can you buy them now? I have no interest in it. I have no interest in buying Tesla at 300 now, and Meta over 300, and NVIDIA almost at $480. Like, it makes no sense. Like, NVIDIA was at $100, not long ago, and now it's almost at $500. Yeah, AI is hot and stuff, but to me, this is, like you said, it's a market melt up. And I think it would be a huge mistake to be buying these companies at these levels. I think for me now, I'm sitting on the sidelines with cash, waiting for another dip like last year, and waiting for another opportunity to get into some of those positions. I'm not going to be chasing stuff at 52-week highs, all-time highs. We're starting to see that all over the place again, right? It's almost like 2021 when we had this huge move up in the market, and then last year was a huge pullback across the board, especially with small caps and cryptos. They all got annihilated. And a lot of those small caps and smaller cryptos are starting to wake up again, but the large caps have really performed well. And as an investor, I think right now is really kind of, you got to tread lightly because, Powell's coming up here pretty soon, and he's most likely going to have another rate hike. Like you said, there's the BRICS news that's going to come out, and I think that's going to have an effect on the economy. So there's a lot of stuff going on that is now telling me to sit back and wait for another drop. I just feel like everything is a little too high right now. The market's the S&P 500 is back to almost all-time highs. Dow Jones around 52-week highs. NASDAQ's at 52-week highs. So at some point, don't you think?
Oh yeah, absolutely. I mean, it's not a great entry point, to your point, to get into those 7 stocks. They're very tech heavy. In fact, if you look at the SPY, which is one of the largest S&P ETFs, I mean, I did some analysis as of May 31st. 26.1% of the top 10 holdings of SPY are tech. So that's not the ETF. 26% of the top 10 are technology. So if you have this in your 401k at work, which like a lot of people do, right? You have an S&P like option that you probably have significant money in, whether you know it or not. This is something to be concerned with, right? Like, I mean, these names have had a great run. Why not take some of that money off the table, switch that into a money market account, and just hang out for a little bit and observe? I mean, it's like you've already made money for years, but, I think we're just in a really odd situation right now, Rich, where I think people are, they're really emboldened, I'd say. Like, investors are very greedy, and we're not. We're looking at this, like, and we respect history, and we look at stuff, and we hear all the time, it's different this time, it's different this time. Well, maybe it's not. Maybe you have to be like a little more cautious and understand that this isn't just a straight line up. And the more we get this kind of euphoric buying, the greater the risk for the 20% correction, right? Because 20% corrections are like standard. If you look at 2018, go back and look at the S&P from September of 18 to December 24th of 2018. I have this memorized because it's just something I remember. It was down 19.9% and then bounced. It was literally right at 20% and bounced. And so people that don't do technical analysis and kind of poo-poo what we do, I mean, we use technicals first for that reason. It works. So, you have to respect that. And when you're at all-time highs, where's the resistance, right? Like, if you're short, you're in trouble on some of those tech names because they keep melting up. And even something like GE, yes. I mean, look at that. It's like the chart looks beautiful, but at what point, does the music stop and there's nowhere to sit? And so we don't chase stuff like that. We just own none of it. And look, we'll make money on other stuff, right? I just mentioned Champion Electric. We bought heavily at 3. We're in it, 12 now. We've made, hundreds of % this year in 7 months. So we're very happy with that stuff. And
wow.
We'd rather buy something like that where we have a relationship with the company. We know everything about the company inside and out, and we can just feel more comfortable with our investment as opposed to just, crossing our fingers and hoping.
John, we've been live for an hour. This has been an amazing time. I've learned so much from you. I'm really, really impressed. I'm really excited about speaking with you again in the future and learning more about what you do. This is John Feneck Consulting. John, anything else you want to say before we say goodbye?
Just we'll have stuff in the show notes, I'm sure, about how to contact me, but I'm very accessible. We try to help everyone that we can. So, any of your listeners, we will try to give some type of discount to based on what they're trying to achieve, right? So like if someone comes to us with $100,000, it's different than someone coming to us with a couple $1 million. I mean, you have different investors out there with different experience levels, and we try to be accommodative. So don't feel shy about, hitting me up with an email or a tweet or whatever you'd like. So,
well, thank you for joining us today. And thank you guys for watching. This is your host with the most, your boy Rich from Rich TV Live with the Bull and Bear Show, episode number 8. And our special guest, John Feneck Consulting, is his company. And if you guys would like to learn more about John or you like to invest with John, just message me. I'll put some information in the description of this video so you can get in direct contact with him as well. So John, make sure you send me some of your contact details or maybe give that to EMIN. I'll put it in the description of this video. So if anyone wants to get in contact with you, would like to invest with you, feel free to do that as well. And other than that, wish everyone a great day. Hope you're having a great day. Hope you have a great weekend. And John, thank you for joining us today.
Thanks a lot, Rich.
Always a pleasure. Have a great day, everybody. And remember, if you're not winning, probably not watching. because we bring you the winners and we bring them to you first. We love bringing you CEO interviews, breaking news, trending topics, and we love to bring it to you first. And we want to wish everyone a great weekend. And John, enjoy the rest of your weekend, and we look forward to seeing you again.
You too. Thank you.
Have a nice day, John, and have a great day, everybody. We'll see you soon.